Hello, today is Friday. It is September 25th. I'm Jonathan Gurney. The goal with these videos is basically to give you a realistic perspective of where we stand in the market. Again, we have no problems shorting the market. We have no problems with cash. We believe that cash is the position. The last 3 weeks has proven that. Wish we would have had more in cash. But our broad-based approach that we took 3 weeks ago really saved us. Don't get me wrong, we are down. I'm not trying to hide that. I'm frustrated with that. However, that prevented some much larger losses. For example, the NASDAQ, great stocks in there, basically was down at from peak to trough about 15%. So it's been a rough 3 weeks. This week specifically has historically been the worst week throughout history from a performance standpoint. Doesn't mean you sell more. It's just kind of interesting. It did follow that cue this week. Nothing this year has followed any of those cues, but boy, it sure did this week. With that said, so there's good news and bad news. The good news is that we beat the S&P 500. The S&P 500, as you can see, was down for the week. Russell 2000, which had done, held up decently the last few weeks. Value was hoping to do and outperform a little bit better, but it got spanked this week. So in short, my philosophy is basically, which would you rather own when things are down? I mean, good names like Apple down 20%. What would you rather buy when you have these sell-offs? Would you rather buy energy? Would you rather buy crap that, would you rather buy airlines? Would you rather buy banks at these dips? No, you want to buy the leaders that actually have done well. And so a lot of times these are cleanup areas for myself and many others to basically say, if you have something that you were using as a value play, get the heck out, either raise cash, clean up positions, and allocate it to something that's probably going to be first bought. Okay, so that's definitely something that we have been doing over the last week. We did enter some trades this week. We entered some money. So we are now 80% invested in general across clients and 20% cash. We did beat the S&P 500. The worst client, I believe, unless you were brand new, just because we weren't able to get it into the market, was down about 0.23%. So we beat the market by 0.4%, which means over the last 2 weeks, we beat the market by 1% in total. So last week we managed to end the week positive. This week we were a little bit negative, but I did have some clients that are willing to take a little more risk that were positive this week. That is a win. To even come out near flat this week, that is a win when you see this volatility like this. I mean, the Dow was down 1.19%. Understand that the S&P 500 was down much more early this week. Okay, so I want to show you a few things. This will be a quick video. We basically had the price action of about a month within a week. Okay, so I'm being honest with you, I'm exhausted, but we did manage the trend quite well. We still lost money since the peak, but considering how we usually are invested, we're not losing a 20-30% on our positions. We're losing now, I think we're, for the month, basically down 4%. So not horrible considering where many people are at this point. So, and again, we're trying to beat the S&P 500, so we have to take a certain level of risk, okay? So this is the S&P 500. This is the last basically couple weeks. Shows the peak, 35.88. Went as low as 29.09. That's a pretty significant decline. I believe at one point it was 11 to 12%. So I want to show you, we're getting nuts moves right now. And I've been saying all week the levels to watch. If we broke and held below 22.25 in the S&P 500, I was out. And we managed to regain steam and some of the levels that I bought at, not in the S&P 500, but individual areas, was once we got into out of this range. Again, it went, that's a 1% move between this range. So that you have to understand perspective wise. So we start the week with a big gap down. The 21st is Monday. Big gap down from 23, call it 20, to 2260. That's not a fun way to wake up in the morning. Was hoping for a gap up because most of the moves do happen overnight. Mondays have been historically pretty good days. Boy, that was a rude awakening coming Monday. So, in short, we are still kind of in this downtrend. Understand we had several fake outs where midweek we're like, oh, break out of this level, which would have been a buy for me, which right at the 3330 level failed, and boom. I mean, that within a day, that's a 3% move, people. You see this 3.2, it's approximate, but these are the kind of swings we're having. And so if you're not comfortable with that, don't watch your account. The best way to handle these times is to understand that you're going to have big swings. Okay? I will manage them, and if we break below the 22.25, I don't think it'll hold again. The good news, despite the ups and downs, the head fakes, we did close pretty well Friday, which was new. We have not really had a nice close. Thursday and Friday were not horrible days. Friday finally held its gains, and that's a plus. We have to view that as a win. Are we out of the woods? No. I think we will need stimulus money for the market to really feel okay about this whole election thing. Okay, so we're not out of the woods. That's why I'm kind of showing you red, yellow, green. The next level that we're at right now is 3,300, which we closed right at. This is a level it's not shown on here, but 3,300 is a good psychological level. Can we get this gap up Monday? That's what I'm hoping for. Some continuation to say some buyers came in. They did not just sell immediately. The 3270 was a key level that I basically have been saying all week. Check on social media. If we break this and hold, it will lead to good things. So we went right to the next resistance level, which was 3,300. That's where we basically closed. So really good close Friday. Not at the peak. It did go as high as 3,306, but we'll take that. That is going in the right direction. What I want to see is more confirmation. I mean, 3330 would be kind of like, hey, if we get there and hold, I think it's going to incentivize buyers to potentially go as high as 3428, which has been a huge resistance, a wall, call it. Just like 3270 was a wall right in this level. This is going to be a difficult wall. So we're not out of the woods, but we had progress Friday. So in short, for clients, it was all over the place this week. Very frustrating when you see this where you're like, thank goodness. Like I added right in here to say, oh, great. You think you're out of the woods, and boom, it tanks. So some heartbreaking kind of price action, but this is normal. This is what bases look like. If you're not used to this, it's good at a young age to be able to look at this and say, that's interesting. If you're watching your account balances, you're going to lose your mind. If you watch price action, you can better understand what is happening. And that's how we are managing funds specifically. So good price action on Friday. We are still in a downtrend. And so I do need to have some cash still available. If this level, if 3270 gets tested again and fails, I have a hard time believing that I'm going to be holding. It's going to be all based on the price action at that time, but don't assume the worst. We could have a nice pop that I continue to sell into. So naturally, it's very easy to say, oh, the election volatility, but understand The NASDAQ, which, you know, the largest holdings are Facebook, Amazon, Apple, some big names. This was down about 15% over the last 3 weeks. That's a big move. 15% in 3 weeks. Okay, so I'm not sure if it's done yet. Some good things is that we did regain the 20-day moving average right here, this gold line, 273.50. Did we gain it? Sorry, we regained the 10-day. Sorry, so that's a step in the right direction. But I'm going to be honest with you. This cross of the 10-day and 20-day is not a good thing. This losing the 50-day moving average is not a good thing. So a lot of mixed signals. And another thing that's often important to watch is uptrend, downtrend. We got to get above 50 from an RSI perspective. So we're kind of like, hey, good signs here, good things on Friday. Hopefully this goes more momentum into next week, which very well could be. In my mind, you're a lot of chartists, a lot of technical analysts, and a lot of asset managers are going to be looking to see where's the next move, where's the opportunity, because there's a lot of names still down 20-30%. So getting a little curl here in the PMO, which is good. So in short, it was a crazy week. Not a fun week whatsoever, but to come out, some clients were a little positive, some clients were about 0.2% negative. I'm sorry, but that's a win. That is a win in a week like this. I'm not happy with the price action. I wish I had done better from the beginning trend down. But we did take good steps along the way, and we've been taking good action steps to make sure we get back in should we go higher. Okay. So again, the steps that we took 3 weeks ago were get index based. It's not a good environment to do swing trades are okay, but it's more of a scalping type environment where you get a quick 1% and get the heck out. That's what we've been seeing a lot of, and that is what has worked, because you get a quick 3% down day and people are hoping to get 1% up move and get the heck out. So that's what we were seeing all week. And then Friday, some of those gains started to stick a little bit. So that is ideal. That's what we want to continue to see. We're not out of the woods, but I feel good with the fact that we have about 20% to invest. And if we do not hold price action, I'm out. So sleep well at night, leave it up to me, and let me know if you have any questions. Thanks again. Appreciate your trust. This was not a fun week for anybody. Seeing 3% intraday swings is not easy. How quickly we forget the 8% swings that occurred in March in a day. It's been a nuts year, but I will tell you that I think should things get better with COVID and after the election, I think people are going to be really surprised how high this could go. As always, no predictions, but the environment is very good for equities right now. Again, you hear all the negatives and the downgrades when everything is going down. Again, price and sentiment, they follow each other. When things are going down, you hear all the negativity. When things are going up, unfortunately in the news, you still hear negativity. But in general, the market moves up. So at these dips, I have to add, you might be frustrated with that. But we had a decent week because I was able to add into some of that weakness. Okay, so we're not out of the woods. This is what I'm going to be living by this week to help me gauge my moves. They are big swings. It's heartbreaking when it goes up 3%, then down 3% in a day. That's what we're seeing, and I don't expect that to change. Hopefully we're on a little bit of an upswing here. This was a good move, a really good start. So thanks for your trust. Have a good weekend. Happy that this week, which has historically been the worst week, is over. I still think there's going to be a lot of rebalancing occurring because it's the end of the quarter. So that will shake some things up. But you know what? With some of these names, good names, like leadership names down a decent amount, you start to question how much more it could actually sway the market. So I am still a little bit on the optimistic side, especially with Friday's price action. But if we lose 32.70, I will probably have to take further action. So hang in there. Appreciate you. Let me know if you have questions. Thanks again.